Welcome to Energetic Incorporated, April 3rd, 2025. How you feeling? It's been a hell of a week. NASDAQ and S&P are both flirting with a bear market. NASDAQ's down about 23% since its peak in December. S&P 500's down about 17%. They've erased around $17 trillion combined, $8 trillion on the week. When we compare that to, say, 1987 and the 22% crash, 1.7 trillion was erased back then, which would be about 5 trillion in today's dollars. So this is a substantial loss. So who better to chat with for some perspective than a man with 4 decades of financial experience who's worked on every continent, traded through market meltdowns, including 1987, an incredible economic thinker, podcast legend. He's going to share some things that'll make you go, My great pleasure to welcome Grant Williams. My goal at Energetic Media is to try to help people see the source code of how things actually are working, like what's actually happening. You know, forget these economic terms and whatever. Let's look at what's actually happening and or where should I position myself based on what is happening today.
Yeah, I think, okay, so on that, I think the first and probably the most important thing for people to understand is it's not fair, right? Life isn't fair. Nothing's fair. Markets are even more unfair than life. And that is just a fact, right? Because markets are based on information, and some people have much better access to information than others. Many people have much deeper knowledge of how markets work than others. And a lot of people have no clue about the way the markets work and are pulled in by the seductive aspects of making money. And in recent years, you know, we've seen grifters make hay with this. People that understand how the market works, understand how the system works, and can create a narrative that pulls in unexpected and incredibly unsophisticated, naive people with the promise of easy riches. And we've seen this with things like GameStop and AMC and all these meme stocks that we saw a couple of years ago. And in fact, I posted on Twitter the AMC share price chart not that long ago, and I called it one of the saddest but most inevitable stock price charts of all time. And it was, you know, this thing shot up, and you know that the people with more information and more understanding and more nous about how the markets work fleeced millions of retail investors who thought they were fighting for a cause, who thought that their champion, Adam Aron, the CEO of AMC, was, you know, their guy and was going to stick it to Wall Street. And the truth was, he was fleecing them. He was doing what he needed to do to keep his company alive and make sure he got his $1 million or $2 million out the company. So to have someone like me with 40 years experience say, I understand little bits very, very well, and I have a decent sense of how it kind of all fits together. But there are pools that I just won't go paddling in because I know there are big sharks in there. Object lesson for retail investors who have downloaded the Robinhood app because their buddy said they should buy a few shares of this, that, and the other. You are at a tremendous disadvantage. And the more you blindly listen to people telling you what to do, the bigger danger you're in, frankly. And I understand the mission you're on, and it's a noble one. And it's one that I've also tried to achieve over the years, is to try and help people understand things better. The problem comes with the fact that in people understanding better how the game is rigged and how the game works, it's nowhere near as seductive as the chance to double, triple, quadruple their money. I think it's going to get easier because, unfortunately, people are going to lose a lot of money, and so they are going to want to know why. That's the opportunity you have to say, okay, you want to know? Now you want to know, we're in the right place. I'll tell you, because you want to know now, and you're going to listen, you're going to take it in. But unfortunately, the kind of the pain has to come first for a lot of people, and it's a sad truth, but it's the reality.
For a lot of people, I think they have trouble accepting the fact that they've just lost a lot of money, and that's when they don't even want to. I don't even want to look at it. You know, their portfolio, and that's the exact time you're like, wow, I should be excited. I should be on the hunt. You know, I want to dig in and try to make some changes here.
You know, unless you're an insider trader with flawless information, you are guessing about every single thing you do. It's a guess, pure and simple. Some guesses are more educated than others, but we're all guessing. We're guessing where the market's going to close today. We're guessing the effect the Trump tariffs are going to have. We're guessing whether we get inflation or deflation. It's all a guess. And
we're guessing when the Fed comes to the rescue.
Yeah, but because of that, you should expect to be wrong a lot, you know?
Yeah.
And people should expect you to be wrong a lot. And it's the easiest thing in the world to own that and say, yeah, you know what, I looked at everything. I looked at the tariffs. I looked at this. I looked at what happened after the Smoot-Hawley Act, and I looked at this, and I looked at that, and I felt like I had a good feeling what was going to happen, and damned if the market didn't turn around and go the other way. It's okay. It's perfectly okay. But this need to be right, and sadly, in a lot of cases, this need for others to be wrong is a real problem. You know, it's a real problem, and I don't know how that ends. I suspect markets are going to humiliate an awful lot of people before they're done, and maybe part of this big cycle turning is a return to humility and a turn away from egoism. I hope so. Because it's a most unflattering quality.
The standard advice is to not let your emotions get evolved when you're managing your portfolio. But I actually like to take it one step further and say you want to channel good emotions. You want to avoid the fear. You want to avoid the panic. It's very notable how veterans become stress inoculated. Consider how Buffett's raised so much cash of late. They don't react in fear. They prepare, they lay in wait to act in times like these.
Yeah, the system is the system. This is the system we have, and until it breaks, which it will, until it breaks, it just is, and we have to function within it.
Well, we have to prepare ourselves, and that's why we go to things like gold, and we expect monetizations and bailouts and inflation.
The point I'm trying to make is, if you go and buy gold or I go and buy gold, and then expect the system to collapse because we've bought gold, we've figured it out, and now we've got gold, the system can collapse. It just doesn't work that way. You know, all of these systems, they have a lifespan, and they will be abused to the point of collapse, and they'll be bailed out every chance they can be until one day they can't. And when that one day comes, there's going to be a whole bunch of people on the sidelines going, "See, I told you," as their neighborhood burns to the ground around them. So getting it right, you know, look, gold doing what it's done in the last year, and gold being at 3,100, I mean, it's down today, but gold being through $3,000, there are a lot of people cheering that. You know, people who are doing victory laps and hanging the mission accomplished banner up because they said that gold was going to go higher. But the fact that gold's going higher is really bad news. You know, I don't know what to tell you. If you bought it because you thought the price was going higher and you're going to sell it and make a load of money, congratulations. Terrific. But for people that don't understand it, gold is screaming a warning about something much more problematic coming, and being right about the need to own gold. It's only yourself you're helping. You're not really helping anybody else by owning gold, but it might give you a chance of avoiding some, not all, some of the pain that will come when the system collapses. So we've all become so fixated on the number, on the price, on the profit, on the loss. It's I won't say it's pointless, because it's not to a lot of people, but if you make the number the only thing that matters, you miss the forest for the trees. You don't really get what's going on, because you know if you make a 20% profit in fiat dollars and your purchasing power declines by 25%, well, guess what? You're worse off than you were beforehand.
It's amazing how many fund managers have not beaten gold. You know, if you look over the last 25 years or something, you know,
yeah,
like
absolutely right. And look,
all the fees, all the gaming, all the work, and yet just a pet rock, you know, in the form of gold performed better.
Well, but look, Kevin, it's important for people to understand that at the right point in the cycle, what you just laid out is bound to happen, and it has. Mm-hmm. At the wrong point in the cycle, when there is very little debt in the system and risk assets are trading at low valuations, gold's the last thing you want to own. And that will happen again. There will be a time.
I don't trust me. I don't want to own gold, and I don't think government should need to own gold if they just ran their businesses properly, right? Like collect the taxes properly and don't run massive deficits and don't print too much money.
That ship has sailed, my friend. That's
we're obviously going to need a reset
business
there.
model will be forced upon them. They're never going to choose to change that business model.
I just think that it seems more and more now like a lot of the youth are sort of up in arms about the whole thing, and that's why they're going to the crypto. That's why they're just sort of looking at this path, and they're pissed. Like in Canada here, we still have a pretty big housing bubble. And young people today are like, this makes, how could I ever afford a house in this environment? And I'm going to have to work like this, and how can I save? And I just think that it seems more and more now like a lot of the youth are sort of up in arms about the whole thing. And
I don't know if it's if it's accurate to say the system is rigged against them. It's definitely not fair to them. And rather than it being rigged against them, the problem they have is the people in charge of making the rules within the system are the people who've done really well. The boomer generation, they're in power. They're in Congress, and they're in the Senate, and they're in the White House, and
they won't leave.
Turkeys don't vote for Christmas, right? So they're not about to change the rules. But that generation are all in their 70s and 80s now, and some of them, the kind of trailing edge of boomers are in their probably late 60s, early 70s. And so the millennials and the Gen Zs are going to be the next keepers of the flame, if you like. When the boomers, they're going to have to die to leave office the way things are going, but when the boomers all start coming out of office, it's likely to be millennials and Gen Zs that get elected replacement. That's their chance to redress the balance. That's their chance to make legislation that levels the playing field. And the question then becomes, will they do it? Or will the representatives of that generation that get into positions of power get bought off by the people who don't want their lives changed? Who knows, right? But this is how the world works. And so, again, this brings us perfectly full circle back to where we started this conversation. Life isn't fair. And my friend Dimitri Kofinas has called it financial nihilism, which is, I think, for me, is by far the best description of it. It's this, to your point, the system's unfair. We can't afford a house. I'm doing worse than my parents did, and so I may as well live life large and work less and party more and spend my money on thing and not save for a house and go out to restaurants every night. But relying on or sitting back and expecting and waiting for the system to be changed to make it more fair to you is a guaranteed way.
Oh, for sure, yeah.
To remain
But I think you'd agree. What I'm hoping anyway is I think that we need to take steps to, whether it's there's different ways to go about this reset, but we need to preserve a middle class, because if you don't preserve a middle class, things fall apart completely.
And the simple truth is that asset prices, particularly houses, need to get cut in half. Maybe if house prices come down because there's a recession and people lose their jobs and the house market is flooded, it's terrible for the people that have the houses. It's terrible. And whether it's done upon their death in terms of inheritance, okay, fine. But that may come too late for a lot of people who want to form a family and can't afford to, or want to buy a house and can't afford to. That transfer of wealth is absolutely imperative. And it will happen because it has to. And when something has to happen, it will happen. Change is a problem for human beings. We don't like change, right? We don't deal with it well. And big changes are even more problematic. And so the system, the way it has functioned for a long time now, has worked very, very well for an awful lot of people. And the stability that system has provided, everybody knowing that the United States was going to run big deficits, everyone that knew that the United States was going to be their biggest export markets, and there weren't going to be any kind of meaningful tariffs, and this is just the way it worked. And now here comes Trump saying it's not going to work like that anymore. We're going to change things. So now you're taking this enormously intricate, complicated system with incredible amounts of interdependencies, and you're saying we're going to make the priority something else now. And once you do that, all of those interdependencies are put under stress, and they need to be rethought and pulled out of this socket and plugged into that socket. All these readjustments are made through financial markets, through prices, through financial assets. So we're seeing oil prices fall, and we're seeing equity prices fall, and it looks like complete chaos to us. And if Trump pushes through, it's going to bring immense volatility, and it is going to end up with, I would imagine, there's no guarantee of this, because when you change a system like this, it doesn't tend to always go as exactly the way you think it will. But, you would think asset prices and the wealth that has been generated by the system will be redistributed in some way. The question is, how does it happen? Is it voluntarily? That's unlikely, because human beings tend to not want to give up a whole load of wealth they've accumulated. Is it through policy? Hopefully. With all the talk of Trump's tariffs this week, we float in the financial water. So everything we see in terms of headlines is through the prism of what's happened to the Dow and what's happened to stocks and what's happened to this, what's happened to that. But if you step far enough back from that and you say, hey, the equity market is heading towards the kind of values where Gen Z could actually buy some in their Robinhood account and put them away and start building some wealth with them.
I think we still have a ways to go in many things.
No, we do, but it's headed that way. It's heading that direction. And all we read is how Trump's screwing the stock market. And I'm not a Trump advocate. I'm not a Trump hater. Trump is the guy in the office, and Trump's who we have to deal with. But the point being, what's happening, if you are a financial protagonist, you're tearing your hair out, because what he's doing is creating volatility and downward pressure in the equity markets and risk assets in general. But if you're a 25-year-old who's gambling in Robinhood, and because what's the point? There's no point. I can only afford 2 shares of Apple. Why would I buy 2 shares of Apple? And what am I going to do with those? Well, guess what? If next month you can afford 4 shares of Apple, maybe that changes the calculus for you. I don't know.
How will trade actually end up? What's it going to look like when trade's balanced? And I see the rest of the world buying things that are actually very energy intensive from the US. That's the only thing they're going to want. It's not going to be labor intensive, because labor's mispriced still compared to Asia. So it's going to be
bones for a whole other podcast there, my friend.
Awesome. Got to say this. I really appreciate the time, so much.
You're welcome, Kim.
Great respect.
It was a great pleasure.
Great. Thanks
all
very
right,
much.
Man. Well, listen, good luck with everything, and we'll do this again soon.
Yeah, good. I hope so. Ciao.
All right. Take care.
I want to thank Grant for honoring me as a guest this week. You should check out his website. It's grantwilliams.com or grant-williams.com. You can also check out his podcasts on various social media sites. Thank you all for watching. I hope you enjoyed it. If you did, please hit like and subscribe, and I'll see you next week.